Good morning, viewers, and welcome to another edition of the Market Review, where we bring you developments in the financial and capital market as it relates to the economy. Today, we'll be taking a look at the Securities and Exchange Commission and its provisions for capital market operators. How is that going to drive market efficiency? We've seen several of the statements and the signals from the apex regulator of the capital market for operations of the capital market operators, expecting them to be on board and ensure that they drive efficiency in the market. So how that is going to play out and impact the market will become very, very important in the days to come. But we will take a look at some developments in the market. I'll give you an outline of what we will be discussing this morning. First, we'll begin with the fact that, of course, the review of what happened in the previous week in terms of equity market performance and what could be the trends to expect, and that's from ProShare Research. Also, we would be taking a look at the Guaranty Trust Bank, a leading financial services group in Nigeria. It got the nod of its shareholders to carry out its planned holding company structure. Also, we will be looking at the drive from the Securities and Exchange Commission to improve listings of companies and increase the product offerings in the capital markets. Also, we will now go on to the Securities and Exchange Commission's drive for capital market operators to be on top of their game and bring value and accountability to ensure that there's market efficiency. Also look at the implications of that for the capital markets, and definitely we're on to a very interesting session this morning. So let's first begin with the discussions around the fact that the capital market, the equities market, had its very interesting experience. It rose last week as reflected in the Nigerian Stock Exchange All-Share Index and climbed by plus 0.72%. Market capitalization advanced at about 137.46 billion naira, while year-to-date return and market capitalization improved to plus 30.91% and 18.37 trillion naira respectively week on week. Previous week opened quiet as investors traded cautiously with no aggressive appetite for profit-taking and bargain hunting. But towards the end of the week, the benchmark index closed lower with profit-taking on tier banks. Last week, Monday, 30 November 2020, the Nigerian Stock Exchange announced the launch of the Associated Gold Board Index and migration of several companies, Chelarams PLC, Living Trust Mortgage Bank, McNichols, and of course, Ottoabasi Savings Banks and the Initiates PLC, from the alternative stock markets, or SM, to the growth board. Performance across sectors was mixed for the previous week as the Nigerian Stock Exchange Banking, Nigerian Stock Exchange Consumer Goods, and Nigerian Stock Exchange Industry Index retreated by minus 3.13%, 2.78%, and minus 2.21% respectively. On the other hand, Nigerian Stock Exchange Insurance, Nigerian Stock Exchange Oil and Gas Index closed positively by plus 1.56% and plus 1.71% respectively. Market breadth closed negative for the week with 21 gainers as against 45 losers. During the week, which ended on last week Friday, December 4, 2020, 4 quoted firms declared their results. 2 out of the 4 firms declared revenue growth. Critics, one of the key players in the market, and of course, recorded 36% growth in earnings to emerge as a firm with the highest growth in earnings, while Niger Insurance, which was among the companies that declared its performance, recorded 59% negative growth in earnings to emerge as a firm with the least growth rates. And the shareholders of the Guaranty Trust Bank PLC have approved the holding company structure for the bank as they express excitement about the benefits they will derive from the new structure. At a court-ordered meeting held last week Friday, the investors gave their approval to the company for the transfer of 29,431,179,224 ordinary shares of 50 kobo each in the issued and paid up share capital of the bank held by them to Guaranty Trust Holding Company. This was done in exchange for the allotment of 29,431,179,224 ordinary shares of 50 kobo each to the shareholders in the same proportion to their shareholding in the bank, credited as fully paid without any further act or deed. Expressing his members' excitement over the planned restructuring, the founder, Independent Shareholders Association of Nigeria, ISAN, Sir Sonny Nwosu, explained that the shareholders are excited because the arrangement the bank has put in place is devoid of complexities usually known as share reconstruction. According to him, the bank has performed well under the leadership of the chairperson and managing director, and thus projected that the HoldCo will perform better if the duo is still in charge of the new brand. He said, "We're excited about the development because we are going to get value as everything we have will be transferred to the holding company. There will be no manipulation as a result of reconstruction that usually leads to fractional shares." Also commending the bank's leadership, the president of Progressive Shareholders Association of Nigeria, Mr. Boniface Okezie, noted that GTBank has over the years proven to be a force and leading initiator of revolutionary advancement and technology-based development in the nation's banking industry. And we look forward to the growth and the advancement it is sure to bring into the new business areas it will be taking on with the HoldCo structure. Speaking further, the arrangement where all existing shares of the bank will be transferred entirely to the HoldCo in the name of the beneficial owners is a good one, while the same number of units and percentage will be held in the new entity is commendable. Speaking at the court order meeting, the Managing Director and Chief Executive of GTBank PLC, Mr. Segun Agbaje, explained that in line with the Central Bank of Nigeria's regulations, which require that the separation of commercial banking business should occur from other financial services businesses, the bank is adopting the HoldCo structure. According to him, "I'm delighted over the approval by shareholders for the holding company and assured investors of a more rewarding future. The bank will not embark on any share reconstruction as the same number of shares they have with the bank will be maintained." One major story for the year 2020, that GTBank is now evolving into a holding company. Let's go on to the Securities and Exchange Commission, who really seeks more listings and product offerings in the capital markets to build a robust and diversified market. The Securities and Exchange Commission is exploring those avenues to bring more companies to list on the capital market and to increase the number of products in the market. The Commission said the initiative will raise the market capitalization of the Nigeria Stock Exchange and contribute to the development of the nation's national economy. The Director General of the Securities and Exchange Commission, Dr. Lamido Yuguda, disclosed this during the 2020 annual workshop of the Capital Market Correspondents Association of Nigeria, CAMCAN, which was held in Lagos over the weekend. Dr. Yuguda, who was represented by the Director of Lagos Zonal Office, Securities and Exchange Commission, Mr. Stephen Falamo, said the Commission took some strategic initiatives to boost market activities and crystallize the growth of the Nigerian capital markets. He noted that this was done to cushion the negative impact of the global pandemic on the capital markets, while adding that its Committee on COVID-19 has continued to provide support and equipment towards combating the pandemic and its effects. According to him, the Securities and Exchange Commission has continued to leverage on its business continuity plan and those of its operators to ensure that capital market activities are carried out during this period with little or no disruption. Yuguda assures stakeholders that the Commission will be making more deliberate efforts towards attracting retail investors back into the market. Currently, investors with multiple accounts are being allowed to consolidate their accounts into a single one and claim their accrued dividends. This is in a bid to encourage more domestic participation in the market. In deepening the market, we are also exploring various avenues to increase the number of companies and instruments in the market, thereby raising the market capitalization. Speaking for itself, we believe that this is necessary for our market to continue to contribute this quarter to the development of our nation's national economy. Speaking further, the SEC boss revealed that the Commission is set to embark on reduction of time to market to ensure it dislodges bureaucratic bottlenecks encountered in raising funds from the market. This key initiative involves the ease of administrative procedures from the point of registration of market instruments with the Commission to actualizing funds raised from the general investing public in order to create efficiency. According to him, the Commission is currently improving its surveillance system to identify any form of malpractice in the markets. Obviously, it's very important. 2020 has been a year shaped by the pandemic, and the market has been really yearning to have those very big activities in the primary markets, particularly key listings that will deepen Nigeria Stock Exchange capitalization amongst other activities in the market Don't forget that Nigeria Stock Exchange at a point has this very ambitious goal, which is good. It's good to be audacious, of a $1 trillion market. There are economies that have a $1 trillion capital market in terms of capitalization. Saudi Arabia is among them. Brazil is among them. So why can't Nigeria join? Definitely, a lot has to be done to encourage more listings and deepening of the markets. Let's look at something that's been a very interesting development this year from the Securities and Exchange Commission. It has been rolling out various guidance, rules, regulations for capital market operators, from in terms of them operating to their directory and information, and also their dealings. It's been very, very a top priority for SEC. So let's look at the SEC rules for the capital market operators and the dealings. And it says, in line with the provisions of Rule 56(1) and 2(c) of the regulations of the Securities and Exchange Commission, which states that registered brokers and dealers shall disclose to the Commission any dealings in a security valued at a minimum of 500,000 units executed in a single deal or in multiple deals on the same day on behalf of its clients or on the account not later than 24 hours after such activity. The Commission is requesting that all capital market operators registered as brokers, dealers, or broker-dealers will henceforth have to comply with the rule and forward the required returns as in the template provided. The returns shall be sent to the following email address in an Excel CSV template. This email address is stockexchange@sec.gov.ng. While also the implementation of this template will take effect from January 2nd, 2021. So obviously the capital market operators have nothing less than 2 to 3 weeks to align to this new regulation and rule, showing you how SEC is zooming very well on the activities of capital market operators. But we can recall that the Securities and Exchange Commission proposed sundry amendments to its rules on renewal of the license and costs and activities of CMOs. They issued those proposed sundry amendments on the rules for capital market operators, ensuring that they continue to operate and carry out their activities. This is in line with their desire to maintain standards and deepen market activities. So in terms of that, the parts to the additions to the rule states that every capital market operator shall file applications for renewal of their registration every year and shall renew it by filing the appropriate SEC form as contained in the schedule to the rules and regulations. Similarly, the capital market regulator also proposed an amendment to the quarterly returns forms for unit trust scheme fund managers. That's what SEC has been doing in this regard. So let's take a look at why SEC is beaming its light and carrying out these activities in the market. The first reason why we believe that SEC's new provision for CMOs in terms of dealings, in terms of regulations, in terms of the operations and activities, why this is happening and what are the implications for the capital market, is to drive market efficiency. An efficient market is very critical for Nigeria, and that is contained in the Capital Market Master Plan, a 10-year plan which started in 2015 and is expected to round up in 2025. Nigeria wants to be among the top major capital markets with a robust ecosystem that is driving market activities. So these provisions, it believes, will help to drive market efficiency. Next for it is improving market transparency. Market transparency is very important for investors, for all those that are watching the market, particularly retail investors who are the target of the Securities and Exchange Commission and other exchange players. The retail investors, the confidence level, which was affected in 2008-2009, is to be regained. And market transparency is that key point that can drive that confidence, bring them back to the market, and they believe that the market will create value for them. So improving market transparency is part of this objective, we believe, of the Securities and Exchange Commission in its new provisions for capital market operators in the market. Also, it is looking at deepening the capacity of the capital market operators when it made those demands in terms of information of capital market operators, their level of exposure, what they are doing presently, and the understanding of those who are the MDs and CEOs of CMO in the market is all about deepening the capital markets capacity of these operators, because they also are entrusted with huge investments in millions and billions of naira. So it's very important that their capacity, their advisory role, their trading activities, all that comes to the fore. And this is part of what the Securities and Exchange Commission, we believe, is taking into consideration. Next is strengthening the best practices in the capital markets. You know that markets across the globe have best practices, and where you don't have best practices, it becomes an issue to even attract investment. So this is part of it, having the best practices considering the ambition and the audacious move of all the key players in the ecosystem who need to be raising more capital, attracting more listings, and even diversifying the markets. Another aspect is part of the Securities and Exchange Commission focus and agenda, which is strengthening the corporate governance code in the capital market. Corporate governance is very important. It is very critical to ensuring that market responds to effective set down rules and regulations, and all operators align with it. So strengthening corporate governance in the market has become a top priority for the Securities and Exchange Commission, and this, of course, is informing these various provisions for capital market operators that we've seen. And next is improving market stability. Everybody wants that level of stability in markets. So this, again, helps when the operators are very efficient, when the operators are working according to the rules and guidelines. It helps to bring market stability. And of course, ensuring that the market operating standards are sustained. Globally, all markets are expected to sustain the operating standards. And like is earlier stated by the SEC DG to its representative, there is going to be zero tolerance for infractions. That's why they have a market surveillance infrastructure. So these operating standards must be sustained. And that is why the Securities and Exchange Commission is being a searchlight on the CMOs, expecting that they will align in all this. So this is part of those things we believe is informing the approach of SEC in rolling out the various guidelines, the various requests from capital market operators, and we hope that with very engaging interaction, understanding, this will help to boost the market, deepen it, drive value, and make it the exchange of choice, not just in Sub-Saharan Africa, not just in developing economies, but across the globe. And definitely, it will be a good opportunity for all Nigerians, those who are investing in the market too. And yes, when this happens, I believe we will see an improvement in the activities of the market, the number of investors and those that are participating, which is still very low and calls for deeper capital market inclusion. That'll be all for today's edition of the Market Review. You can visit our website, www.proshange.com, to watch our videos with our news reports and stories and analysis. Send your views and comments on the current developments around the Securities and Exchange Commission and its guidelines issued to capital market operators. How do you think it will affect capital market operators? What do you think the regulators should do more in terms of strengthening the system? We'll be glad to receive your views and comments and respond appropriately. news@proshange.com. Also follow updates on the capital market on Twitter at the Analyst NG. Also on our ProShare website, click on the markets. You'll see all the analysis covering equities, commodities, fixed income. We have them all covered for you in the capital market and the listed securities. ProShare are just leading financial information hub is that single market hub, information hub that gives you concise, reliable, and data-driven information that will make you take that informed decision when it has to do investing in the markets. Please, always click on and you get more information. That'll be all for this edition. Thank you for being part of the show. Thanks for watching. Have a nice day and stay safe.